Many traders completely miss how to trade Bitcoin systematically. They usually slap on some indicator with some values that they found on a blog post or a YouTube video. With random settings or some guru settings, they keep taking every breakout and they wonder why they keep getting stopped out. In this video, I will show you how to build a profitable swing trading strategy on Bitcoin. I will show you step by step how to use the CCI indicator to build the profitable strategy on Bitcoin futures and how to add strategy filters to enhance the strategy even further. Before we even touch the CCI indicator, we need to answer one important question. Does Bitcoin futures have any market edge? And the answer to that question is definitely yes. If you are familiar with my Algo versus Crap series, then you must have seen this chart. And if you are not, I highly suggest that you watch these videos. Basically, I test several indicators systematically with robust methodology to see which indicators perform the best on 60 plus futures markets. And as you can see, the CCI is not one of the best. In fact, it's ranked 18 in the so far 23 indicators that I tested. But I picked CCI for this video because it is not one of the best. Otherwise, if you pick one of the best, it will be very easy. Now, if I filter the CCI indicator on only the two cryptocurrencies that I have in my database, which is Bitcoin and Ethereum, we have 11 strategies. And if I switch to the right side, you can see that all Bitcoin are long. And out of the 4 strategies for Ethereum, 3 of them are short. So we definitely have a long edge on Bitcoin using the CCI indicator. Now, out of the 7, I have 4 breakout strategies and 3 mean reversion. Now, since I do a lot of mean reversion strategies, I decided to do a breakout strategy. What I just showed you is an extremely important point to keep in mind. You should always start from a strength point. You should always trade with an edge. And the edge usually comes from the market characteristics. In this case, Bitcoin tends to behave much better on the long side than the short side, even though that Bitcoin usually, had like huge crashes. So you would expect that it should do also well on the short side. But as we see, it does not. And Ethereum, even though it's a cryptocurrency and follows Bitcoin, it shows the opposite. It has 3 strategies on the short side and 1 on the long side using the same indicator. Now that we establish that we are going to go long with a breakout strategy using the CCI, the next steps are actually extremely easy to come up with a profitable strategy. Now, the only issue with Bitcoin futures is the data. Although Bitcoin has been trading since 2009, the futures started in 2018 and only became popular about maybe 2020. But the important part is we have all market regimes during this period. So this is my direction market regime and this is my volatility market regime. Now, these indicators are proprietary for Algo Trading Masterclass students, but I did a video recently that shows you how you can build your own market regime system. And I just wanted to show you that since 2018, basically we have all kind of data. So we have very short, very long, sideways, and we have extreme volatility, low volatility, and normal volatility. And many of these exist in that period. So this is important because I want to test all kind of markets. And in this period, like I showed you, we have everything. We have long run, short run, extreme volatility, low volatility, and everything in between. So we cover all type of markets. Now we're still going to face another issue, which is the low number of trades, because basically we only have, let's say, about 6 years. And to overcome the short data history we have, we can go down to intraday to build a strategy with higher number of trades. Now, I'm not going to do 1 minute and 5 minute scalping. This is not the channel for that type of trading. So I will choose 180 minutes, which is 3 hours. That should give us a lot more trades so that at the end we can filter out some of them to come up with a better strategy. So this is Bitcoin futures with 3 hours time frame. So every bar is 3 hours. And below it here we have the CCI indicator. And usually the CCI indicator is plotted with 200 and minus 200. Although the CCI indicator is not bounded, so that means it can go over 200. And so for example, you can see here, it's about 332. And basically when the CCI goes up, that means momentum is up. When it goes down, that means momentum is down. So if we are using the CCI for breakout strategy, that means we are looking for the CCI when it's going up above a certain level. So we will start with the basic strategy. We have the CCI look back period, and we have a buy level and a sell level. That means we are buying when the CCI above a certain level, and we will exit when the CCI is below a certain level. So the sell is not the short side, because remember, our edge for Bitcoin is long, and we are using the breakout methodology. This is the performance of this basic strategy. So we have about 600 trades with 38% win rate, which is very expectable because remember, this is a trend following a breakout strategy. So usually the profitability is below 30. And we have, it's nothing to look at. Average trade 133, but it still is positive. So like I told you, because once we find market edge, it's very easy to find a profitable strategy. So we will optimize our strategy for the look back period 3 to 20, step 1, and for the buy level, which is this guy, from 0 to 200 in a step of 10. So that means we will test 10, 20, 30, 40, and so on and so forth. So when the CCI above this level, we will go long. And when it's below this level, we will go short. Now you can see this is also positive because in the code, I flip it to negative. Otherwise, this should be negative when the CCI is below minus 20, minus 30, minus 40, and so on and so forth. So overall, we have about 8,000 combinations. And let's do the optimization. And here are the results sorted by return to drawdown. And we can see we are achieving 3.2, so $376,000 with about $120,000 drawdown. These are the settings. Now, instead of picking this one is making slightly more money, but more importantly, it's making double the number of trades. Now, again, this is one of the important points that most traders miss, because you need a lot of trades in order to filter down those trades with a strategy filter to come up with a robust strategy. If you start with really low number of trades, then you don't have much room to navigate. And we can see that the lower we go in the return to drawdown, the lower the number of trades. So I will pick this one. And of course, we can always get a better average trade, better return to drawdown, by adding strategy filters. So the CCI look back period is 4, the buy level is 90. That means when CCI go above 90, we buy. And when the CCI go below minus 60, we exit the trade. So here is the performance level. And now we have a better average trade for this strategy. And now I will introduce a new concept because this is an intraday strategy. Now, usually I don't like to use stop loss or profit target for daily time frame strategies because usually these are mitigated with a big portfolio. But for intraday strategies, it makes sense actually to get into stop loss and profit target. Also, there is another command that we can use, which is break even. Now, break even meaning when your strategy make a certain profit number, you can move your stop loss to break even so as not to turn a profitable trade into a losing trade. So first thing I will test is the exit with a fixed number of bars. So I will test between 2 and 24. So 24 bars, meaning it's 3 days because we have 3 hours here. So this is very acceptable for an intraday strategy. And let's do the test. And sorting by return to drawdown, we can see the top is 17, 14, 18. So they're all double digits. This is our original strategy. But the enhancement is not that big. Like, I mean, 303 to 327 That's, within the parameter of noise. But it's much better to have a fixed exit of bars if the strategy does nothing. So any of these will work as it reduces the time that you are in the market. I will pick 14 because it makes slightly more money with slightly more drawdown. Okay, now that we have the look back and the CCI level to enter and to exit and the fixed number of bars, the strategy is baked now. So now we can play with profit target or stop loss. You cannot now go back and change the original strategy. That strategy is a good strategy on its own, and now we only want to make it better. So this is our strategy metrics. We are making about $400,000 with 3.2 return to drawdown. This is our equity curve, total trade analysis, 1,259 trades with an average trade of 331. Now, if we look at the list of trades, you can see the up and down is in thousands. So as you can see now, these are fixed. The CCI period is 4. Buy level, sell level is fixed. Exit number of bars is fixed. And remember, this exit of number of bars is just to limit our exposure in the market. And now these will play a big role if it's going to enhance our strategy or not. So we're optimizing each one from $0 to $10,000 in a step of $1,000. And we can do it in a step of 500 also. But really, these figures should show significant improvements, otherwise we will not use it. And here are the results sorted by return to drawdown. This is our original strategy, 3.22 return to drawdown. And look at this, definitely we are making much better return to drawdown. So this is a significant improvement over the original strategy. This is very interesting. So stop loss and the top return to drawdown are all 0. That means we are not using any stop loss, which I like. It aligns with my principles. So this is very good. Then we come to profit target and break even. Remember, profit target, if you reach this level of profits, you sell. And break even, if you reach this level of profitability, then you move the stop loss to break even. So that means you're not making 1,000. If you make $1,000 profit, then you move your stop loss to break even. And most likely that's why the stop loss is 0. Another interesting fact we see here is all the break even is 1,000. So this gives me high confidence that the 1,000 is good. And the top 5 strategies are between 6 and 10,000. Now this is also good. You can see that in this one, we are not using a profit target. We are only using a break even, and we enhance our strategy significantly. So this could be a really good choice. But because all the top strategies using the break-even 1,000, so I'm very comfortable with fixing the 1,000 and then pick one of these. So you see the sequence of events. We determine the market edge. Based on that, we picked an indicator that hopefully you tested. If not, you should test that indicator. But if you are just aligned with the market characteristics, then you're already on a good solid ground. So with the CCI, if you pick anything, actually it's going to work, but we pick one of the, let's say, best all-around figures. Then we added an exit number of bars. This is just to limit our time in the markets. There is no degradation or movement to the strategy. And then we added the stop loss, break even, and profit target. Because it's an intraday strategy, it makes sense to add those figures in. Now, stop loss was 0, so that's great. We lose one variable. And the break even was all 1,000 in all of them. So again, that's great. We fixed that variable. And then we play with the profit target. It didn't make any changes, actually, if you pick anything above $5,000. And this is our final strategy, making $560,000, 6 to 5 return to drawdown. This is the equity curve. Trade analysis above 1,600 trades with an average of 338 trades. Annual period analysis since 2018. We have 3 losing years and the rest are profitable, with 2024 is the biggest profit so far. Of course, 2025, we are only 2.5 months in. Also, this is nice to see is the average trade is growing up every year. So that means our strategy is having a good market fit for now. And it's getting better every year since 2022. Now we can stop here, and this could be a good trading strategy. But of course, every strategy should be much better with a strategy filter. Now, this is not necessary, but because we have a huge number of trades, over 1,600 trades, I mean, you definitely have to use filters because you can always bump up the average trade and reduce your drawdown. Probably you're going to reduce your profitability, but definitely you're going to reduce your drawdown by adding a filter. And now I added two strategy filters. One of them is volume and the other one is volatility. And we can see the improvement. The return to drawdown now is 6.8, and we reduce our profitability, but also our drawdown. The most important part is I reduce the exposure. So now our exposure is only about 11% in the market because Bitcoin is very volatile, and the less you are in the market, the better. This is our equity curve. Also now it's much smoother. Total trades, we go down to 465 trades from 1,600. The average trade now overall is 710. So we doubled our average trade. Average number of bars in all trade is about 4. So that means it's 12 hours. And finally, this is our annual period analysis. So we reduce our losses in 2 years and we keep our trending up. So remember, 2022 was down and now we keep increasing our average trade. So far, remember, 2025 is only 2.5 months in. There you go. Beautiful strategy to trade Bitcoin futures on intraday. Now, there is still one more caveat. Bitcoin futures require a huge amount of capital to trade. So this is the Bitcoin futures on CME, and it requires about 113,000 to trade a single contract, which is what I used in the strategy that I showed you. But you can use the micro Bitcoin futures, which requires about $2,300 for a single contract. And actually, because this big contract is very expensive, the volume is also low. So look at this. This is Bitcoin futures, and the average is about 25,000 contracts per day. While the micro Bitcoin futures, the average is about 100,000 contracts per day. And the trend definitely that this will become more popular because, of course, it's cheap. So just like the S&P 500 micro futures, this is now becoming the most popular contract on cryptocurrency. Now, to trade the micro futures on Bitcoin, all these numbers will be divided by 10. So the $18,000 will become $1,800. The 145 will become $14,500. Of course, with the advantage that now you can use 2,200 to trade a single contract. I will write a post about this strategy and several other filters that you can use with the code in my next Algo Trading newsletter. You can subscribe to the free newsletter using the link below. If you like this video, then you will love the next one.